It's the final trading day of May, and the S&P 500 closed the month up 3%. David, I mean, what about that old adage, sell in May and go away?
Well, we started to see a little bit towards the end of the month. You actually had the S&P 500 go down 6 times in the last 9 sessions, but you're right. S&P is now working on a 7-month winning streak. It's the longest streak since 2009.
What can we expect for June? Because I know that's a bad month for the market typically.
Yeah, when you look at some data put out by Bespoke, actually, June's been the worst month for the last 20 years. So I think we could see some shift. We're seeing the traders react to the higher interest rates on the Treasury notes right now. And so you're seeing a shift out of the defensives into some of the more cyclical names. We'll have to see how that works on the overall averages.
Another trend that we're seeing that's interesting, and you as a portfolio manager of the Dividend Stock Advisory portfolio, we're seeing some people trade out of those dividend stocks.
Certainly, as some of the higher yielders, a lot of the MLPs, a lot of the stocks are yielding north of 5% up to 10%. They were running in droves away from those stocks this week. So I'm actually going to be running some screens next week. And which is interesting because I've been really reaching for yield with the DSA. Back at the beginning of the year, it was easy to find stocks that yielded 3 and 4%, raise their dividends consistently over time. Now when I run those screens, I'm getting 10 to 20% of the names. They've all been bid up.
Oh my goodness, it's a crazy investing environment out there right now, actually. And the market is up 16% year to date. That's the S&P 500. So where do you put your names? Do you go into the cyclicals?
Well, we are looking for buybacks. Some of the cyclicals, yes, especially look at the stocks, the sectors that were up. Financials.
Yeah.
Financials will benefit from this yield curve, even though some of them have been bid up already. Look at the upgrade at Morgan Stanley. Stocks still trading below tangible book value. Technology, everyone's been saying tech has been cheap all year long. And you're finally starting to see some of those stocks move. Both of these companies, both of these areas of the market, you have companies with very strong balance sheets, and I think you can see this rotation continue in the first couple of weeks of June.
Well, in the week ahead, I think the one thing that we definitely have our eye on is the payroll number on Friday. If it comes in well, do you think we're going to get a tapering from the Fed? That's what everyone's talking about. It doesn't matter if we do.
Right. Right now, is good news bad or is bad news good? I don't think the Fed's really going to show their hand just yet. That doesn't mean the market won't start discounting it. I really don't think the Fed, whether I agree with the policy or not, will change that policy anytime in 2013. But you're right. I expect a choppy trade ahead of Friday's numbers. We're still looking for decent growth on the payroll number, and then we'll have to take it from there.
Well, thank you, David. That's David Peltier, and I'm Lindsey Bell for TheStreet. Have a great weekend.